Hey, welcome back to the channel, Fully Invested Fi. Today we'll be going over portfolio updates from week 37 since I started investing my full paycheck at the end of May 2025. That's also when I started fully living out of my Robinhood brokerage account. We'll go over the week's performance, dividends received, portfolio news, lots to cover this week with the tech and crypto market sell-off that happened this week that hit my portfolio pretty hard. And also finally the finance video of the week. As always, I'll share all my numbers with radical transparency, and you can see my full portfolio and performance with no paywall. Everything is linked in the description below if you want to follow along and poke at the numbers yourself. So before we get started, as usual, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investments or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. Before we properly get started, for anyone that's new to the channel or someone that needs a refresher, this is the flow chart that I use to invest 100% of my income. So that means at least 10.8K every month that gets invested into growth and high yield ETFs. I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal is to ideally never sell a share, forever compound both my growth and high yield assets, and have my monthly dividends eventually exceed my monthly expenses. If you want an in-depth breakdown of this chart, please check out this video at the top right. And yeah, you'll get all the information you need on it. Let's dive right in. So if we pop over to Robinhood, we can kind of check out my fully live portfolio here. So nothing hidden here. You see all my positions, all my performance. And yeah, so this week definitely been a crazy one. So yeah, if we pop over to the week, you can kind of see that yeah, it was a bit of a roller coaster. Started out the week at 155.6K, and it went up for a bit, went down, kept going down, and then there was like the big sell off over the last couple days really. And yeah, all the way down where I was down 14.4K and 9.25% on February 5th, which is crazy. And yeah, along with that, my equity was going down quite a bit. So definitely dipped under 50% this week, which was worrisome for a bit. But we'll see how we kind of handled that next week with my paycheck. But then on Friday, there was a nice recovery. So for anyone that bought the dip, unfortunately, I didn't buy any of the big dips this week at least. But yeah, we'll see how it goes next week. But we got a good rally up on Friday, and yeah, I ended up being up like 6% on the day Friday. So over on the week though, still down 1.9% or 2.9K. But yeah, a lot better than when I was down 14.4K in the middle of the week. So all things considered, did fairly well, even with that market dip from the tech and crypto sell-off. On the month, still down 4.25% or 6.7K. On the 3 months, still recovering from that November dip, right? Yeah, trying to crawl my way out of there. So down 3.99% or 6.3K. Year to date, I'm down as well now too because of that big dip. And again, this is kind of like one of the dangers of margin, right? Like you're amplified both to the downside and the upside. So because we've had these like major dips, that definitely gets amplified by the margin. So yeah, definitely not for the faint of heart. But yeah, now I'm down 1.41% or 2.1K. So for a good chunk of January, actually, I was actually outperforming the market. And kind of see here, I was kind of like, I think maybe even doubling or tripling at one point. But yeah, these dips have kind of killed that momentum there. So we'll see if we recover from that or not over the year. On the 1 year, or let's just go to all since I don't have a full 1 year yet, I'm up 3.34% or 4.9K. So you can kind of see that since I transferred into Robinhood in July. So yeah, that's how it's looking. Roller coaster of a week, as we can kind of see. If we pop over to my spreadsheet here, we'll kind of get a deeper view of everything. So with all that, we can kind of see here that the gross value of my portfolio, if you add up all my assets, so between my single stocks and my high yield stuff, I'm sitting at just above 300K, 306.1K. I have $153,780 of margin used, which kind of nets me a value of $152,365. I'm just going to go over the last line here with everything. So total profit with everything. If we factor in total returns, as far as like dividends being added to my unrealized gains, plus realized gains and losses and margin, I'm sitting at a profit of $45,329. And percentage gain of 29.75%. So pretty good overall when you factor in total returns, right? And then, of course, if you go onto the unrealized side, even with the realized gains, I'm sitting at a negative $8,038 or a minus 5.28% for the whole portfolio. So yeah, it's really good to kind of see the realities of both sides, right? Like it's important to kind of factor in the total return, especially when you're in the high yield space of things. So you can kind of really see the big difference between the two columns, right? As far as like the unrealized side and the total return side. Definitely a lot more that has kind of dipped into the red this week, which we'll get into once I pop over to Snowball. Just because like on my sheet at least, there's a lot of carryover from previous positions that I'm carrying over. I want to give a more accurate picture of like the total return for at least these individual positions. But that's how it's looking. And then as far as the margin health, you can kind of see here. So if we go down the line, so you saw the gross value that I mentioned, the margin used, that nets me $152,365. And then when we apply my blended margin maintenance to the gross value, this gives me this margin maintenance value, right? So $77,848. So this is the value my portfolio would have to drop to if I'm going to hit a margin call. So basically the difference between this and this net value is $74,517. And yeah, so this is my buffer. So this is how much my portfolio would have to drop for me to hit that margin call, right? And so really, if you look in Robinhood, this is the margin buffer that will typically give you around this 48.91%. So again, as I mentioned too, like I don't like going off the Robinhood number because I feel like it's a little bit too generous and like gives you a safer outlook than you actually are, just because you're like, oh yeah, there's not going to be a 50% market drop, but really this value is actually equivalent of this value, right? So this is off the net portfolio value and this is off the gross portfolio value. So I really keep an eye on this number because basically this number, all your assets combined to this number would have to drop 24.34% for that to be the equivalent of 48.91%, right? So this number is basically the equivalent of this. That's why I always keep this number in mind here. So that's why it's highlighted green. Like these green numbers are the some of the important ones, right? And yeah, as far as my margin buying power, I'm sitting at $65,536. So that's if you minus out your margin total from your margin used, that's your margin buying power. And then if you half that, that's basically your cash available for withdrawal. So this is $32,768 that I could withdraw free and clear from the account if I wanted to. So yeah, in a pinch, can kind of do that, but I'm keeping this healthy. So that's why I'm letting that buffer grow, right? And really, if I did it, for example, like if I actually took out 32,000 or whatnot. Oh, sorry. No, I need to do the opposite here. Minus out 32,000. Yeah, you can kind of see that my equity would actually sustain itself like still relatively well, which is impressive. You see my margin buying power would drop, obviously, but yeah, it's actually definitely, this would put me in a precarious situation here, but yeah, you can kind of see that it could technically be done, but I'm not going to do it. But yeah, as far as the equity, I'm sitting at just below 50%, 49.77%. Even with the dips this week, I was actually closer to like 48% at one point. So definitely under the target that I want to be at, 50%. So yeah, we'll talk a little bit about this a little later in the video as far as what I'm going to do here to kind of get this back up. I have some decisions to make next week with my full paycheck coming in. And yeah, that's for the margin health. If we pop over, oh, sorry. Yeah. And one last thing here, as far as dividends, this hasn't moved too much from last week just because there hasn't been too many investments, but estimating $4,597 right now a month. So that's like roughly a 41.18% distribution rate. If you go off the full portfolio, it's actually 18.80%. So this 41% is really just off the assets that are only invested in the high yield stuff, right? We pop over to Snowball, you can kind of see here. So similar-ish numbers. The numbers are a little bit different in my spreadsheet here, like as far as total, just because I have a lot more history here. I've been maintaining this spreadsheet since 2021. So Snowball only has so much. It doesn't have like all my transactions. I've put as much as I can from the last year, but previous years are kind of like, yeah, just a lot to dig through, but you can kind of see where stuff is sitting at. But you really want to dive into the total returns here. So you can kind of really see my different buckets here. So I split the high yield into three. So the ultra high yielder. So this is YMAX, WPay, and Ulti. So these are like anything that's like above 40% yield, right? You can kind of see that comes with some consequences here as far as like the total return not being the hottest. So YMAX is definitely down here, down 9.34%. WPay down 18.18%. And then Ulti down 9.74%. So that's the one category that was in the red. The single stock high yield ETFs just actually clawed themselves back out. They were in the red for a little bit during this week, but yeah, Nvidia's like quite in the red still. up 21.4%. Misty down a lot, 31.15%, even with total returns. GOW up 12% because Google's been doing amazing. And BTCI, just with the crypto dip, down 28% a lot. So quite a bit. And the high yield anchors, these are doing good. TDAC and QQI still relatively new. So they're, just hovering around that 0% range, but holding up good. XPay is doing amazing here. You can kind of see how it's like even gained on capital gains and with dividends received factored in. And then my little gold hedge here, which is doing good. These are all my anchors on the ETF side. So yeah, these are all doing great because I've been holding them for a while now. SCHD is probably the longest held one out of all of these, right? So doing good, and SCG has been doing amazing this year so far as tech has been selling off, but people have been rotating into value. Precisely why I hold SCHD and for years like this. And so these are all holding up nicely. And then for my growth single stock, so a lot more red this week. Take Two kept dipping this week with the market dip. Reddit dipped a lot, like over 30%. So this is just like definitely a lot more of a speculative play for Reddit. And Hood dropped a lot. So Hood is interesting because it keeps dipping anytime there's like big crypto dips. Like it almost trades as if it's like a crypto stock, even though it's like at this point like just a part of their business. It's a one business line out of like, I don't know how many business lines they're pushing now, like a dozen or so, right? So, or 10, I can't quite remember. But yeah, that's the thing that why I keep buying the dip on Robinhood too, is that like, it's really just a small portion of their business, right? And yeah, the crypto market tanking is not going to tank Robinhood. So I'll probably be buying the dip on this next week with the Paycheck, hopefully. But you can kind of see here, Microsoft's holding up, even though it like dipped 10% the other week. Meta's doing good as well, slightly up. Costco is back in the green now, which is nice. And then Apple just way up there. This is what Apple and Microsoft are two of like my longest held shares, really. So yeah, I've held these since 2021, basically. And yeah, obviously I trimmed those a couple months ago, but yeah, still quite a bit of gains in that still. But that's how the buckets were going. All the top gainers this week, or this is top day gainers, sorry. This was like, all on the day, on Friday, really. Big run up. I was up like over 6% that day with everything. So margin and amplification definitely helps there. But if we pop over to the growth side of things to kind of look at how I compare to the S&P. So let's just have a look here. So I'm just going to isolate this to the week. Where are we here? So February 6. Cool. So you can kind of see exactly how I did against the S&P this week. So yeah, just trailed the S&P by 0.6%. I was down 2.61% or $4,000, roughly $4,000. And the S&P, I think how they assume stuff is that like if I had invested in my portfolio in the same times as I did in the S&P, so that's how they kind of track the performance here, I think. So it would have been down $3,244 or 2.07% if I did the S&P. So good, always nice to compare, kind of see how I'm doing. Like my goal really with the portfolio is to ideally just match the S&P, factoring total returns. So like if I match it, great. If I perform, great. Even if I'm a little bit below that, I'm like not so bad because like, yeah, I roughly matched the S&P and still got tons of income and lived out of my portfolio. So that's a win for me. But if we look on the month, I'm definitely down quite a bit. So you can kind of really see the margin amplification at play here, right? So down 4%, the S&P is down 0.01. On the 3 months, like still really recovering from that November dip, right? 6 months, can kind of see here. You can see how I was like outperforming for a bit, but then those dips in October and November really separated things. Year to date, I was outperforming for a bit, as I was mentioning, kind of see exactly here, right? I was almost like doubling it at one point in the middle of January. And then, yeah, these two dips here have really hit it. So we really see the margin amplification at play here. Recovered. So we'll see how it goes for the rest of the year. But overall, solid start. We'll see how it goes. Because yeah, there's some weeks maybe I can even outperform 2-3 times. So depends. It's the margin roller coaster, really. But yeah, on year to date, I'm down 0.79% or $1,200 roughly, and the S&P is up 1.62% or $24.98. On the year, you can kind of see here, so just trailing it there by a couple percentage points. So S&P's up 14.23% or 20.6K, or up 13.6K or 9.84%. So that's with dividends received and everything together, right? And yeah, let's just pop over to my favorite new chart here. So the heat map. Love seeing this. Like you can kind of really see at a glance what happened this week, right? So you can kind of really see SHD still holding up, doing amazing this year with the big rotation into value from tech. Really seeing here how this is really paying off. So this is up 15%. Like, yeah, kind of rare that you see SHD up this much. Even in 2022, when there was a big tech sell-off, this was, in the end, it kind of ended up being a little bit negative, maybe positive with the dividends reinvested, but this is quite a bit. This is a big rotation into value year to date. XPay is up 1.2%, exactly matching VU, which is kind of nice to see. PMO finally kind of clawed its way back out of the negative and had some good momentum, especially on Friday with the upswing. That's up 0.45%. QQM, like, yeah, big tech sell-off this week. And I think QQQ was down like -6% at one point in the sell-off on Thursday. But yeah, just down overall on the year, 0.76%. NVDY clawed back a good number of gains on Friday, especially with NVIDIA pushing up with their earnings. Apple is actually surprisingly holding up well among all the tech names. Apple and Microsoft have been doing not so good, but Apple has done good on the downturn in the last week. YMX not doing so good year to date with all its holdings, so that's down 7%. VU, yeah, you can kind of see what the market's doing there, 1.2%. BTCI, obviously big crypto, like, yeah, just a lot of just leverage got margin called on this week, so big dip on BTCI and Misty. We pay pretty much matching YMAX there, even though they have like a lot of different holdings, but some overlap there. Microsoft, the big dip from the other week, -10. Ulti here, surprisingly, actually outperforming the S&P so far, up 2% if you factor in the dividends received. So yeah, that's why like the other week I'm still investing in Ulti. I think like its new strategy is kind of working out pretty well. Still early days, only a couple months in, but so far I've been pleasantly surprised. So it's kind of nice to see year to date it's been doing okay. Costco doing amazing too with that rotation into value from tech. So yeah, that's why I was investing so much in Costco last year as it was dipping, right? A lot of good gains there. Take-Two obviously has dropped a lot too with the market. It's probably looking like I might next week probably do another Hood and Take-Two buy if I do invest my full paycheck in next week. Google up as usual. Meta, GOW just leverage Google, but only 0.3%. So not quite the 25% leverage that GOW is supposed to have, but the down days definitely drag it down. And gold up great. It's 8.5%. It's still crazy, even though the big sell off the week before. And yeah, like I mentioned, Reddit down a lot this week, 40%. So kind of see that at a glance, everything. So yeah, really love these new charts here. You can kind of get a quick view of like how it was for the week. So yeah, you can kind of see a lot of red, right? So, but SHD stayed up, Costco stayed up, Apple stayed up, gold stayed up. So just love this to kind of see at a glance everything. I'm not going to go over everything again, but you can kind of really see it visually, right? What happened this week. And yeah, as far as the dividends received this week, we can kind of just take a look here. So first week of February, so it's looking like it might be a little bit of a down month as far as dividends. We're projected to get $3,949. So we'll see how we do for the rest of the month. But this week got GO a little $13.43, and that was like a 45.9% dividend. UPay got $158, and that was a 47% dividend. Ulti got $202, and that was a 66.7% dividend. YMAX got $128, and that was a 48.7% dividend. Misty, $42 and a 66.7% dividend. And NVDY, $154 and a 34.8% dividend. So decent week. A lot more coming next week with XPay coming in and whatnot. We'll see how we fare for the rest of the month. If we pop over to the dividends page here, you can kind of really see how things are faring as far as like the yield on cost, right? So like, for example, Ulti's this week's dividend was 66.78%, right? But given that my average cost per share is pretty high on Ulti, the yield on cost of that dividend is actually closer to like 45.37%. For Misty, yeah, 66.7% on the dividend itself on the current price, but the actual yield on cost, given my average cost per share, is 12.76%. So pretty low there. But honestly, I think for Misty and NVDY, I might just kind of let them ride because I don't want to realize those losses. And I think I just want to keep the ROC on them. And the more I think about it, that's probably where I'm leaning, but we'll see. And yeah, YMAX, its dividend yield was 48.7%, but my yield on cost was 32.22%. WPay, 47%, yield on cost 33, GOW 45, and actually more for given that I'm lower. BTCI, yeah, 35.4%, but yield on cost 22.56, and VDY 34.88 or 22.94. Yeah, XPay staying steady at like the 21% range. TDAX staying stable at 17, QQI staying stable at 14, gold staying solid, like an even better yield on cost given that it's gone up, so 13.19%, and SHD, yeah, you can kind of see how my yield on cost is building with the dividend growth every year. So yeah, that's how the yield on cost stuff is looking, right? You can kind of really see where all the passive income is coming from. As far as updates related to the portfolio, so you may notice that there's a little new tab here. So for ROC, right? So I noticed this week that if I pop over to the Discord here, if I scroll back, we talked about this, or I talked about this like way earlier in the week. But you may have noticed in your Robinhood and maybe other brokerages that like your your average cost basis per share might have updated, right? Yeah, so I noticed that this week where when I was perusing the Robinhood, like particularly on Misty, just because, so this was like down 78%, right, at one point. And then when I looked over at Robinhood, I was like, oh, this is actually down less. So I was down 73%. And then I realized, and I saw a couple of people mention it on Reddit, I think in other Discord servers, that their cost basis got adjusted because of the final ROC calculations coming in. So yeah, I noticed that came in Robinhood. I never actually noticed that it happened in Fidelity, but I'm seeing others saying that it did happen for their Fidelity as well in the last couple of weeks. So I did update my sheet just to kind of see the difference there. So quite a big difference where you can kind of really see here where like the unrealized gains changed quite a bit, right? So this kind of got less quite a bit just because it basically bakes in any ROC into the total returns there and then into the unrealized gains. So this is what I was at before. For example, I was down 26,000. And then here I'm down 12,000 here, right? So big difference there. And the difference there is that the ROC, so anything that's like basically tax deferred, they actually just kind of added that to as gains essentially for your dividends. So I basically made the difference between this number and that number when I first noticed that. And just to calculate the rough ROC that I got this year. So it's looking like when I minus those out, it's looking like I got $13,642 of ROC or 65. So I actually want to, maybe if I bring up my thing here, just to kind of get maybe a rough estimate of potentially what I'll owe on taxes here. So I had dividends received here of 237.82. If we minus out the ROC, so $37,595. So potentially, I think my tax bracket will be 35% this year. So potentially, we'll see if this turns out to be right, I might owe $13,158 in taxes on those dividends. But the key thing here is that I don't think I'm going to owe this much just because I have here all my deductions, right? So I'm going to have a lot of deductions that I'm going to add just from having a side business with the YouTube and some side gig career stuff that I'm doing. I have like a lot of entertainment related deductions that are going to come off, my mortgage interest deduction, HELOC deduction, property tax deductions, margin interest deductions. I have some carryover losses from previous years I can still bring over. And then this is the ROC, right? I was estimating here like roughly 25, so less than that. But yeah, so I think like all those deductions should hopefully chip away a lot at this, and hopefully I won't owe too many taxes, right? So the last couple of years I've actually had like refunds, as I mentioned in my tax video, and I'll link that up top if you want to have a look. And even in years where, so I'll probably be matching my AGI of like 2022, so closer to 266K. So, but even then I ended up getting a refund, right? So I owed some money. This was back when I was still in California, but we'll see. So yeah, I may get a refund or maybe I'll owe a little bit, but if I end up owing just a couple of thousand, given how much income I brought in last year, like if I owe like, I don't know, 2,000-3,000 and I brought in this much income last year, I think that's worth it. And even if you factor out the margin interest, still pretty good. Like it's a good, still a good spread there, right? So we'll see. And I'll definitely, as usual, I'll be transparent about that and report back about it. I have my tax appointment with my tax person in March. So I'll definitely let you know whether I get a return or if I owe money, and we'll see. And if it ends up actually being that I owe all close to this, like then that might maybe make me reevaluate the strategy a bit. Maybe I put more aside for taxes potentially in like SGov or something as dividends come in, or maybe even I just reevaluate the whole strategy. Maybe I go pure growth and margin, kind of like what Recycle Your Money is doing, for example. So yeah, we'll cross that bridge when it comes to it. But yeah, just as a heads up there. And yeah, I mean, obviously we were talking about it earlier, but there was the big crypto and tech sell-off this week. I think like crypto, a lot of leverage ended up getting crushed, and that sold off crypto like crazy. Tech sell off, there was like quite a bit from just kind of like scares from earnings as far as like all the capital expenditures coming for AI. I think that spooked a lot of investors. So that's why there was the big sell off in tech here. And then it seems like Nvidia's earnings kind of helped lift everything up at the end on Friday. So yeah, the AI bubble fears are definitely still there. So we'll see. I think that'll keep coming every few months until we really see like really good, like kind of gains from it and efficiencies and investments, right? I think it's like a long play there. Like it's smelling a little bit like 2022 so far this year. So we'll see how it goes. Like, cause in 2022 went down quite a bit, like 20-30%. It's, well, yeah, we're going to keep an eye on that because like, yeah, if it dips that much, then I'll have to, yeah, kind of bring in some emergency contingency plans there as far as like money and paying down margin and whatnot. So keeping an eye on that. And yeah, and then also this week, as far as portfolio news, you probably saw the video that I posted on Thursday, but yeah, I ended up getting the Robinhood Gold card. I kind of talked about how I got that through Reddit essentially. So check out that video if you haven't had a chance yet. I had over a dozen people at this point that have managed to get it through this method, like both on my Discord and on YouTube in the comments. So definitely check it out if you're interested in the Robinhood Gold card. It's been really great to finally get that and start earning points like that. All that money is going directly to the brokerage. I can pay down margin, or even just what I typically do is just buy more assets with it too. So definitely check it out. And then, yeah, the big thing is that, so with my equity being down under 50%, like I've talked about this in the past, but like that kind of leads me to some decisions to make. So my paycheck is coming up next Friday. And yeah, so in case like that, I've always mentioned that like what I might do is just have the paycheck deposit to cash and margin, bring that equity back up, and that basically pushes me back up, right? So that would push me back up to 51.53%. So I either can do that, or what I can potentially do is bring in an extra 5,400. So what I might do is maybe bring in basically the matching my paycheck from my HELOC. So I have like about 16K of room in my HELOC right now still. So what I might do is maybe add like another 5,400. So to push my equity back up, and then I would still invest all that, right? And then if you factor in kind of like my bills coming in, I think I have roughly like 1,656 and like I think 1,900 of bills that need to come out. So if I put all those together for the next 2 weeks or whatnot, yeah, this is what roughly I would project my numbers to be at, right? Like, so if I both put in my paycheck and then also just that extra money from the HELOC to just kind of pay down the margin a little bit, and then factoring in the bills that come out, that would put me at a equity of 52.14%. So a little bit more room. My buying power would be at 80,000. My cash available for withdrawal would be 40,000. So yeah, I'm kind of leaning on that potentially next week just to kind of help buffer things a little bit more and just keep investing and building assets, right? But I'll think on it. You'll definitely see what happens come next Friday. So yeah, if it end up just depositing my paycheck, that'll just be a very short video on Friday and you'll see. But we'll see. I'm kind of leaning on the latter with the HELOC method here. This is also just why I love using my spreadsheet for here, and I can kind of simulate these situations, right? So yeah, we'll see. As usual, we'll be transparent about all that. And just to end things off, as usual, finance video of the week. So Gary Gill had a great interview with Yujin Vasquez this week in his GG podcast. And yeah, so Gary's been great to follow just because, like, as I've mentioned, I've been helping manage my mom's portfolio in Canada. So I've been following a lot of other Canadian high yield investors too. So it's been great to follow along his stuff. And yeah, and then Yujin, of course, I've mentioned him before in finance videos of the week and other videos, but yeah, he's had a good candid convo about the realities of doing YouTube for the both of them and how it may affect how you invest. It's cool to kind of get a breakdown from Yujin of how he's evolving his strategy this year and how he's changing it up, what he's doing on YouTube. So leaning pretty heavily on AI. He's live streaming a lot more. But yeah, been watching Yujin's videos since early last year, and even bigger fan of him now, honestly, since I became a YouTuber myself, because he's been one of the most welcoming people in the finance YouTube space, and honestly like a huge inspiration with how he carries himself and how nice he is to everybody, how open he is to other YouTubers on his channel. So I took a lot of inspiration from how I run my Discord and how I carry myself as well too. So yeah, definitely check out the interview. Two great people to follow if you're not already. I'll link the video up top, of course. And yeah, and that's the video. If you want to follow me off YouTube, there's a bunch of different ways. As usual, you can follow me on Snowball and see all my trades, all my posts. There's also Snowball Analytics here. All the same numbers I was going over, you have access to this. This is free as well. All these are in the link below, in the description below. You can kind of check out all the same numbers there. Nothing's hidden. You can kind of see all what's on the green, what's in the red, all the same dividend numbers. If there's also a Patreon where I upload all my backlog of videos across both channels. This is just a backup in case there's more YouTube shenanigans, right? But yeah, you can kind of follow along there. I have all the good stuff there. And then of course there's a Discord, like I mentioned. Love posting in here, but in between videos during the week. So a lot of activity there. And yeah, that's where I gave an early heads up to people about the gold card before I even made the video. Talked about the ROC, so you get a little bit of a heads up of like stuff that I'll be talking about in videos if you're interested in that. And also all my trade alerts too, as they happen, you'll see those here. So a lot of little buys of GOW this week with YouTube earnings and Patreon earnings and whatnot. So definitely check it out if you're interested in a community of like-minded investors. And even if they're not, there's some people here that invest and that live out of their brokerage, some that don't, and people are exposed to all kinds of different strategies, whether in high yield and growth. So yeah, love that everyone's sharing. There's no one end all be all strategy, right? To getting financial independence. There's a lot of ways you can kind of get there, and everyone's situation is different. So yeah, if you got some good value out of this, I hope that you'll follow along. Please give a like and subscribe if you're looking forward to follow future portfolio updates or see how I invest my full paycheck next week. I'll catch you in the next one. Have a good rest of the weekend. Peace.